Matthew, as someone living in California, is the world turning left again? Are we going back to socialism?
Not in no, actually, California, San Francisco is
If I take San Francisco out of it.
No, no, I mean.
Shouldn't debt be priced by the ability of the borrower to pay back?
Well, right, but that's the thing. They can always print the money.
The U.S. cannot always print its way out of any kind of trouble.
Question here. Is de-dollarization real? Do you think crypto has future? Can you wager a guess as to what will happen again in the next 10 years?
Well, this is the interesting question, right?
Yeah.
I'm talking about in theory, right? In practice, it doesn't work this way. That's where it gets tricky.
Probably just one thing, that is to embrace whatever comes.
That sounds scary. Thank you both for doing this. Matthew, would you like to go first and tell us a bit about yourself?
Sure. I write about economics and finance. I have a publication called The Overshoot, and I co-wrote the book Trade Wars Are Class Wars.
And Ning?
I'm a professor at Shanghai Jiaotong University and Tsinghua University, and also I wrote a few books on investment in China's macroeconomy. One of them is titled China's Guaranteed Bubble, predicting the collapse of China's housing bubble. And then I've been advising policymakers in China and many other parts of the world on macroeconomics and monetary policies.
Since we are in China today, maybe we can begin by you telling us how the Chinese economy is doing now.
I think the economy is stabilizing. I think we have been having some corrections in the housing market over the past 5 years. That's taking a drag on the macroeconomy. That being said, I think the new growth engine, being the so-called new quality productive forces, higher end manufacturing, new technology, AI, and high-end semiconductors are coming up pretty strongly. There are a couple of issues that's bothering the economy right now. One is, of course, consumption, which is not growing as strongly as people are hoping for. The other is, of course, increasing frictions on the export or the trade side of the economy. But both sides are doing okay, relatively speaking, in the global context. People are just wishing for the better.
Can you bucket China into 10-year periods? Because I don't have that much context. I've read a few books in China, but I don't see... I want to know what changed between 2000 to 2010, 2010 to 20, and what is the last 6 years like?
I think probably one benchmark people would commonly use is the general growth speed. I think for the first 10 years of this century, it was growing over 9%. And for the past decade or so, it was around 7%. And over the past 5 years, it's more around 5%. So I think that's a numerical summary. But then I think if I have to use major milestones in history, 2000 marked China's entrance into the WTO, which is really helpful to China's economy. And then, of course, we have the 4 trillion stimulus packages coming out in 2009, which is a big boost for both infrastructures and the housing bubble. And that, I think, of course, COVID is like a shock to the economy. And then the correction or the crackdown on the housing sector is having a lot of influence over the economy over the past 5 years.
Matthew, this is like a conversation, so feel free to butt in wherever you like.
Sure. I think one thing, as Ning was saying, I think it's worth emphasizing the extent to which COVID was really a break, not obviously uniquely for China, but for a lot of the economies in the world. And one of the big points of contention that we've seen in sort of China's relationship with other countries, and it's come up recently in the past few weeks at the G7 meeting, is this idea of China's rising trade surplus and the idea that the new productive forces that are beneficial on the one hand for Chinese producers are considered very threatening for competing companies in Europe in particular with motor vehicles. And I think one piece of context that's helpful here is that if we look at China's external balance with the rest of the world. In the years immediately leading up to the pandemic, the trade surplus, depending on how you measure it, was around, 100 to $200 billion a year, which is, on one hand is a big number, but it's, the global economy, we're talking about tens of trillions, right? Now it's more like $1.1 trillion a year. So a big shift between 2019 and now. That's really a function, I think, of, several things, but I think very much, the response to COVID. And one thing I think that's striking is the productive side of the economy in terms of, the factories being able to produce more and sell things recovered from COVID faster and better than the domestic demand consuming side. Part of that reflects, as Ning was saying, the consequences of the housing bust. Part of it reflects other factors as well. But, that divergence has been significant and persistent. So even as sort of the overall economy, as I was saying, stabilized, that sort of the composition and unbalanced nature seems to be, I'm not sure if it's necessarily continue to get worse, but it's very large. And as I said, the size of the surplus now relative to the global economy is quite large, in particular relative to the size of China's trading partners.
I'd like to chime in about, I was in a session yesterday called the two-speed economy. It's actually what I call a K-shaped economy. I think that's not just a China phenomenon. This is becoming a global phenomenon across countries or within the same country, across different social stratas. There are very different or diverging trends going on. And then I agree with Matt. I think China's export has been increasing very rapidly over the past 5-6 years. But then I think there's a multitude of reasons for that's happening.
I have a question here. Some countries have a trade surplus, some have a deficit. Fewer have a surplus, more have a deficit. What happens if this continues 10 years, 20 years down the line?
Well, one answer potentially is nothing. It depends. There's nothing inherently sustainable or unsustainable about deficits or surpluses. There are reasons why certain places might want to be spending more than they're producing. The canonical example you'd have is a society where you say you have a lot of younger people, it's relatively underinvested in infrastructure, a lot of growth potential, maybe it's poor or less technologically developed. That's a kind of place where you would expect that the needs of the people to invest and grow rapidly and their future productive potential are such that it makes sense for people in the rest of the world to invest there, lend them money, export, advanced machinery, things like that. And they could have persistent trade deficits for a while and grow rapidly, and that'd be beneficial for everyone. The flip side is you can imagine a society sort of in the opposite situation. Maybe it's older, already at the technological frontier, there's less growth potential, they have already advanced goods, and maybe they would be exporting.
Speaking about the US?
Well, this is the interesting question, right? Yeah. I'm talking about in theory, right? In practice, it doesn't work this way. That's where it gets tricky.
And also on the theoretical side, I think, that is the case when we still have gold standard and in Bretton Woods. But now that is gone, I was just trying to add on, trade is no longer necessarily the only determinator in this equilibrium. Now you can have, one side is the trade imbalance, and the other is the capital account of imbalance, that people have different preferences for putting their money into different countries, or by design, certain countries have the ability to produce more capital or monetary supply than other countries. So that's somehow balancing off of the imbalances in the trade area.
Right. I think, particularly in the U.S. case, and it's not unique to the U.S., I think it's true for basically...
we're not talking about a hit theory anymore.
Yeah. the rich English-speaking countries in general, the thing that they have as an asset is a legal system that people find very investor-friendly. That's a language that people who are...
Used to be.
Well, okay. I said the English-speaking democracies. So this is a broader universe than just the U.S. But and they have a language that basically any rich person the rest of the world knows. So those are going to attract savings from the rest of the world relative to other countries, regardless of whether it makes sense. So you have the strange phenomenon, we've seen this for decades, of places that in theory ought to be, sort of standard theory, should be having trade deficits because of their investment needs, actually having surpluses and sending, buying financial assets rather than borrowing, they are net lending to places that are rich, like the US, the UK, Australia, Canada, New Zealand, because their financial systems are accommodating and sort of meet that need, and which is a very strange, not what the sort of standard theory would say is optimal, but it's what we've been observing for the past several decades. And
just to play the devil's advocate, I think in the old regime, I think when there is really prolonged and serious imbalance in trade, I think if we use history as a benchmark, war is unfortunately the war that we would have to visit or revisit. Well, that is when the two countries or one country with other countries cannot resolve their disputes or cannot address the imbalances for a very long period of time. I think the one which normally is on the deficit side, but sometimes because the surplus side cannot claim the money they are owed, there will be a war or some kind of military conflicts.
Yeah, there's unfortunately a history of colonialism and imperialism tied up with that older model.
Is there an unsaid understanding? Say China has a tariff, say China has a trade surplus with America. Over the long term, is there an unsaid understanding that China will buy, say, American treasury, for example, or invest a part of the money back into America?
I think for now, I would say largely yes, because I think it's both push and pull. One is I think Chinese do find the US dollar to be still a safe asset and it's deep enough that we can deploy our capital into. But at the same time, it's also because there's a lack of alternative. I mean, in a way, this is related to what we discussed in a different session about RMB internationalization, because by that time, even though we're not happy enough with the US dollar as a storation of value, there's really no other alternative we can put the money into. Of course, gold is one possibility, but the market is not deep or large enough for China's
But why
reserve.
can't you reinvest the money back into China to maybe improve the infra or manufacture more?
One is I think China's manufacturing has already received considerable investment, so I don't think we're really looking for capital in that regard. The other is, I think that happens in trade imbalance, so it happens in foreign currency. And of course, it is in the country's interest to keep certain amount of currency foreign currency in order to stabilize its own exchange rate or for the security of the unspeakable.
So what matters when I'm looking at economics and I'm seeing how well a country is doing or what it should do? I look at the trade balance, I look at inflation,
fuller employment, I guess, in domestically.
Employment. What else?
I mean, you look at production of what it is people want. I'm not even sure the trade balance is necessarily the metric by way of success, because there are a lot of things that can affect the trade balance. If one guaranteed way to either reduce a trade deficit or to generate a trade surplus is you just crush your domestic economy. If people can't afford to eat anymore, then but they still can sell things to people in the rest of the world, and you're going to have a shift in the trade balance. That's not a benign outcome. I mean, I think one thing that's useful to remember is a lot of the big shifts you see from surplus. So Korea, right? Very great developmental success story. People talk about export-led growth, but up until the Asian financial crisis, South Korea actually ran trade deficits consistently from 1953 until 1997. I think there was like 1 year maybe in 89, but basically until then deficits. Then you have the Asian financial crisis. It's a very traumatic experience. And then ever since then, they've had large and persistent surpluses. And I think it's fair to say that even though Korea is doing much better now than it was, say, in 1997, the circumstances that led to that shift in the trade balance were not benign. They were not good for Koreans. I don't think it was good for the world. And I think that's an important context for understanding.
Is that what worked for China? I saw some data that China only consumes 40% of GDP. In India, that number is 55%. In the US, it's 68%. Did China domestically consume lesser and hence they could export more?
Proportionally, yes. And I think there are several reasons for that. One is clearly just culture. I think East Asian countries have this tendency, whereas I think India does not have that historical tendency. Part of that is the shock from COVID, both in terms of people's balance sheet and in terms of people's confidence or their feeling of safety with consumption. Another is, of course, what Matthew mentioned about what there is some imbalances. There's certain suppression of certain factor prices and there's some inflation of certain other factor prices. I think in the interest of the country, maybe not necessarily to a particular sector of the economy or the employees in those sectors. So I think that is slowly adjusting, slowly but steadily. But I understand and I think I can see that certain other countries have issues with this model of growth. But then going back to what Matthew has said, I think whatever happened to South Korea or some other Southeast Asian countries during the financial crisis has taught China a lesson about running deficit, maybe even a brief and concentrated period of time could open your country to vulnerability, which is a reason for China want to continue its leadership in consisting or insisting on its export surplus.
Yeah, I would also say that that's not the only time that's happened. So if you look at the Euro crisis, I think we've seen in retrospect a similar phenomenon where a lot of countries were not concerned about effectively a balance of payments crisis of the kind that hit the East Asian countries, 15 years earlier, and then they were. And then you look at the past 10 years, and those countries have adjusted very dramatically. And even the countries that didn't necessarily get IMF bailouts or other things, the ECB, they have shifted. And so Europe as a whole has had this massive structural shift in its behavior in terms of spending less relative to what they earn, which, again, at the individual country level, it's understandable why you have that traumatic experience, you want to avoid it. But from the perspective of the world as a whole, it makes everyone worse off. And so this is a really unfortunate phenomenon that keeps happening. But that's, that's sort of the structure of the way the financial system as it is, having these, periods of, severe stress. And then if you're in trouble, in theory, the IMF is there to help you. In practice, it hasn't really worked the way I think it was intended to. And that's why we kind of keep ending up in the situation.
I think there's a little distinction to be drawn about, how much the whole world is going to benefit or suffer from a prolonged period of trade imbalance. But then there's also, there are winners and losers to that. And depending on which camp your country falls into, I think the countries may have very different views on, yes, maybe the whole world is probably coming down, but then at least I'm still in a more favorable position in the whole world.
Right.
What happens though? Like 10 years from now, say everybody continues at the same level, the surplus and the deficit.
I think I do have a couple of imaginations in my mind. One is, of course, exchange rate. In a way, exchange rate is the way how to adjust trade imbalances. And of course, I think China is going into I still remember China started its exchange rate reform about a decade ago, and then RMB went down in devaluation for about 30%, but it has appreciated 10 to 15% since last summer. So I think it is entering into a period where there is wider range of two-way fluctuation, which I think is somewhat related or reflecting of the trade imbalances, not necessarily as closely as it should be in the past 2-3 years. But then I think that's one way of adjustment. Of course, probably some other countries are thinking China is not adjusting enough or fast enough. So that's one area of adjustment. The other is, I think, really depending on whether you're the global south or you're the more developed economies. I think the global south has issues with the imbalances with China, but then at the same time, China is investing heavily into those countries through ODIs. So yes, there are some issues, but then those countries seem to be feeling, okay, there will be a transitional period where many of the goods we're now importing from China will be eventually produced in China. Of course, that's a whole different kind of questions we can ask, but then they seem to be less concerned, whereas the more developed countries are thinking, well, does it mean that each and everything that we're going to consume in our country will eventually be produced in China, which I think is probably the bigger issue we're talking about here.
Are tariffs an answer? I've never heard an economist say so, but maybe you're the rare exception.
I'm not convinced they would be. Look, strictly speaking, the currency is the thing that you'd expect to move. And what's striking, Ning has said that China's currency has moved more relative to how it used to do. But it's also striking that the exchange rate now, on a sort of a trade-weighted basis, especially if you account for the fact that China's had a lot less inflation than the rest of the world, is actually much lower now than it was, say, 5-6 years ago, which is striking because that is the time period when Chinese goods became much more competitive on world markets. And so normally one might think, if we sort of have a sort of standard model, that's when your currency would appreciate. That if your country's workers are making things that are better and more valuable for the world, one way they are rewarded for this is that their purchasing power goes further internationally, and basically their wages are worth more internationally because the currency goes up and they can import more. And the fact is that it's actually been reverse in the past 6 years. And obviously, a lot of moving parts here in terms of China's not a fully open capital account, what's going on with the sort of invention and all that. But it is striking that is, so it's sort of, we're zooming out and say, like, the currency is very low. How you get it from where it is to what might make more sense in a way that isn't destabilizing from China's own perspective, Chinese government's perspective, is a challenging question. But that I think is sort of a macro perspective. I think that's also why I think some of China's trade partners are looking and say, well, this is kind of unreasonable. And if you have that perspective, tariffs, certainly not the first best option, but you can see why some people might think, like, well, the tariff might correct for this. So, like, the normal reason you wouldn't use a tariff is that if you have normal floating exchange rates, you put the tariff on, And that increases the relative appeal of investing in your country. So people are going to send money there, and then your currency goes up, and then the value of the tariff. Basically, what you've effectively done is you've just screwed over your own exporters. And nothing else has changed. So that's why people don't use tariffs historically. But if the currency is not moving, then that creates a different dynamic.
I won't deny that I think tariff will have some certain impact on balancing the trade imbalance, and also to that extent, I think the floating of exchange rate will do something similar. But I do also want to bring up the possibility or the alternative explanation about, I think Matthew mentioned about why China's export has really take a big leap after the COVID period. I think in that period, yes, of course, there's some disruption in the global supply chain, but then at the very same time, China was managing very well in order to have a very well self-contained supply chain, which can produce a lot of things, not just without disruption, but at a much lower cost or much higher efficiency. So in that regard, yes, if you levy a 100% tariff on toys produced by China, probably China will lose its competitiveness. At the same time, even if you levy a 100% tariff on new energy vehicles, China's new energy vehicles will still be very attractive in European market or maybe even in the States.
Yeah, I think it's also worth, the mechanism of tariff is you're basically making it more expensive for your own people to buy things. So there might be reasons to do that, just like there are reasons to raise taxes sometimes, but it's really clear about how it works and who's paying it and what the costs are. And that's usually why people don't like to do them.
Yeah, again, in theory, I think the whole world will be worse off with tariff, no matter how much and levied from which country.
Are we aligned on that? The world will be worse off with tariff?
Probably. I mean, obviously it depends on sort of what the second order reactions are. I mean, if the thing you're worried about is...
I agree to that, the second order effect.
Right. If the situation, so I mean, to be less sort of generic, like Europeans are thinking about this as a possibility and vis-a-vis China because of their concerns, their auto industry. And if their concern is that if they don't have, if their first choice is they would like either Chinese investment in Europe to produce electric vehicles that creates jobs and so forth, or China has a currency appreciation, some combination of those things, then they would prefer that. And then they say, well, if we can't get that, then we do this tariff because we think there's a systematic problem that's going to wipe out a large chunk of our industry. You can see why from their perspective it might make more sense, even if sort of starting from blank slate, you'd say this is not going to make people better off.
And like many other large and complex issues, I think there's no one solution to the problem.
Right. But if that logic were to be true, I get applying a tariff against China, but there are many countries which don't orchestrate their currency. You levy tariffs on them too, right? What's the logic there?
I don't think there is. I mean, I'm not defending tariffs. I'm talking. You asked the question.
I think it's probably fair to say that we're not, both of us, neither of us is a big fan of tariffs. But then,
yeah. When you guys said earlier that you went to college together, was that at Yale?
Yeah, well,
no, he went there for college. I went there for PhD.
At different times. How old are you guys? I know, but I want you to say it for camera.
Old enough?
Yeah, right. I don't know. I'm 39. I mean,
53.
Okay. I'm asking you all the questions that I don't have answers to, and I wish I knew. Why is American debt or American treasury, say T-bills, 20-year long-term debt, why is it still being bought at 4%? With the amount of debt that America is sitting on, I don't get why the world is buying this debt at 4%.
So mostly it's not the world, it's Americans. Mm-hmm. So I guess that's one point. And in general, and I'm sure Ning has a lot of thoughts on this as well, but I mean, in general, bond yields for countries that have their own currencies, like the US, like China, like the UK, the interest rates mostly are a reflection of what people think inflation and growth are going to be in the future. And it's essentially a question of, this is, if I have a choice between buying this thing that's going to pay a fixed amount over time versus, stocks that are going to go up a lot more, that's essentially what sets the interest rate. And people, they can borrow money if they want to buy it, if they think it's too, the yields are too high or things like that. And that's mostly what's driving it. And that the amount of debt outstanding is more of an issue insofar as you think it's going to affect inflation in the future. But even then, it still gets back to sort of what you think inflation is going to be.
But shouldn't debt be priced by the ability of the borrower to pay back?
Well, right, but that's the thing. They can always print the money.
Yeah.
So that's why there's the inflation point. So as long as you don't think they're going to be, printing so much that it moves inflation meaningfully, and then even then it's still embedded on inflation.
There's really bad precedent to that because a lot has been printed. So I come back to the question, why okay, both the Americans domestically and foreigners, why are they funding the American government at 4%?
I will probably, for domestic investors, I think there are a couple of issues. I do a lot of research on behavioral economics. So one is they call local bias. So people prefer to buy securities from their own country. Period. Every country is like that. The other is I think American economy has been doing very well. And then I think for American-owned people, even if the country cannot repay its debt, as long as it's printing the money enough or fast enough, then I think the American people are happy enough with that. I think the bigger question is for foreign holders, both institutional and to a smaller extent retails. I think there are a couple of reasons there. One is for, I think the largest holders of US dollars is largely foreign exchange or foreign reserves. And for investors in those regards, or to a certain extent, sovereign wealth funds, those institutions, they require liquidity. And they also require the depth of the market. And there's just no other place they can turn to. No other is too strong, but then, you can turn to crypto, but then it's only like $1 or $2 trillion. And then gold is a little bit more than that. But other than that, we're talking about trillions and trillions of dollars of reserves, which have to find a place to park. So in that regard, they have to park in the US dollars. There's just no other country. There's no big enough security for them to find the alternative. So I think that's one thing which I don't want to use the word hijack, but then people don't have the alternative. So that's one explanation. The other is, I think as Matthew has pointed out, US has been doing pretty well after the Second World War. Probably not as well as before, but then I think it all concentrated in the past 20 years after the global financial crisis. Because in 2007, if I'm not mistaken, the balance sheet of the Fed is less than $1 trillion. It was as high as almost $9 trillion, and now I think it's falling back to somewhere between 6 and 7. So we're talking about the Fed is holding 6-7 times as much in its balance sheet, which is pretty much the money it has printed out to the rest of the economy. So I think that's going to affect both inflation in general and also asset prices, which I think is more concentrated in the US. So I think that's going to have long-lasting and serious social and political complications. But then those things take a far longer period of time to adjust.
I think one thing just to point out that's sort of a slightly more benign interpretation of this is, as Ning was saying correctly, that foreign investors, particularly reserve managers, want liquidity, and they want it, which means it has to be a big market. But the only way it's a big market is if there's a lot of debt in the first place. So you cannot have a liquid market for assets unless the government's borrowing a lot in the first place. So it kind of goes together. It's like, why is there not a European alternative? Like Europe is a very large, close in size, collectively to the United States. Ostensibly has a pretty investor-friendly legal system, more or less, but doesn't really compare. Part of it's the market's very fragmented. Individual countries have very strong incentives against borrowing, in part because of the euro crisis and so forth. And so, there's a reason, Japan's another interesting case, right? There's a ton of debt outstanding, actually relatively popular to a certain extent, even though the yields until very recently were basically zero. But, again, you have to, and this is actually something that came up in the panel that Ning was on yesterday is, China in theory could have a place here, but the central government does not issue much debt. A lot of reasons for that, but that is going to naturally reduce the demand or the appeal of these instruments for foreigners if there's not a lot of it out there and it's not traded.
China has capital controls. So does India, where I come from. I personally believe that long term, if we didn't have capital controls, more money would actually flow in and less would flow out. How is it in China? Do you feel that way? Do you think capital controls are a good thing, or money should be more fungible?
As a market economist, I don't think capital control is a good thing. But then going back to what you have said, I think in the very, very long term, depending on how you define long term, I think, yes, probably removing capital control, there will be more money flowing in than flowing out. But in the very short term, this is where I think policymakers are most concerned in almost all countries. I think they're concerned with a short-term outflow, and that's going to create really drastic shocks to the financial stability. And then we have experienced that or witnessed that in the Asian financial crisis and in some other episodes of history. So I think that is where the central bankers and the policymakers in China are putting more attention to. I think that's sort of explaining why China is unwilling to or hesitant in removing capital control completely. I think China is going towards the right direction, but at probably a slower pace than the rest of the world is hoping for.
The rates we spoke about, the treasury rates, 4%, if you had to call it in 10 years, I'm asking you the same thing because I run a fund and I want to know how to allocate money. Where would you call American long-term debt? What rate in 10 years?
Given that don't feel confident I can predict what's going to happen in the U.S. in the next 6 months, I don't. But maybe I'll push back a slightly different way, which is I actually sympathize with the idea that yields are somewhat low, seem too low in the United States now. Not necessarily they'd be 10 years from now.
Sympathize with us or
what you were saying? Then why?
Right.
But although not necessarily for, I'm not sure if it's the same reason, but I think essentially that actually the growth outlook on the one hand in the US, I think is somewhat better than had been implied when people were more concerned in pricing in a lot of rate cuts. Mm-hmm. And also the flip side, that inflation, I think there was sort of a very naive, optimistic view that inflation was just going to go right back down to 2% without any issues. And I think that didn't make sense to me before the Iran war, and it still doesn't make sense to me. And again, for actually relatively benign reasons, insofar as the economy is doing pretty well, the job market's not deteriorating. It had been stuck at 3 for a long time. Like, why would it slow down? And so that's kind of where, if you think that in fact there is this sort of growth impulse from AI related investment, I would think that would increase the returns on risky assets, which means that non-risky assets should pay more compensation, which means yields should go up. We've seen a little bit of that in the past 6 months, but I'm not sure it's been enough. Unlike you, I did not run funds, so I don't feel confident enough to actually, there's a lot of risk management things associated with that. But that's kind of where I would be on that. Looking sort of the longer term, you'd have to look at things like, well, what is the state of the rule of law in the United States? What's the growth? What happens to demographics, right? There's already had a huge change in the demographic outlook in the past couple of years. Mm-hmm. That is going to have an impact on long-term growth trajectory, which should affect what you think is the right set of interest rates. So there's a whole lot of things that looking 10 years out, very hard to say.
Are there any direct correlations between demographics and economics? Like, the world is aging. India, which was a very young country, is aging too. What changes from an economic policy thinking in a way when the world is older?
So in theory, what people would say is that you have less need for investment because you're not having the extra growth of more people. Well, older, I guess a couple things. There's a population growth rate. Then there's like the age composition. Those things tend to be related, but not quite the same. So if the growth rate of the population is slowing, you should expect to have less investment. That should push down interest rates. All else, not changing. There had been research about saying that aging populations should actually lead to higher interest rates. But if you look at what the samples were, they were all based not on the actual age structure, but the dependency ratio. And the dependency ratio of the societies we're looking at were all ones with lots of kids, which means they were actually growing rapidly. So it's a very different dynamic than having a lot of old people. So even if it's the workers to non-workers ratio looks the same, they're going to have a very different kind of perspective there. So, the only real example we have of a country that's sort of done this is Japan. Although interestingly, Japan now, you've seen interest rates go up a bunch recently. So, who knows? There are a lot of moving parts. Demographics are clearly important, but how they translate to everything else, I'd love to know what Ning's thoughts are on this.
I think I tend to agree with Matthew. I don't think I'm going to give you a straight answer. A couple of things. One is I think the whole world is undergoing so many changes that it's very hard to make any reliable predictions on almost anything. I recently published a book titled Nonlinear Thinking. I just think that we tend to think linearly even though the world is going through drastic changes. The second is I worry less about demographics, even though it is a very, very serious issue. I worry more about the relative safety across different countries. After all, the yield on treasury is not just a matter of the investment value, it's also about the safety. So I think given all the things that's happening in the world, I think relatively speaking, US is probably still the safest. So in that regard, what is the benchmark for the whole world when it comes down to monetary policy? I don't know. I think ever since the quantitative easing, we have entered into a new regime that nobody really knows the answer to, because beforehand we thought, such quantitative easing, such a big supply of money will lead to inflation soon enough, but then we haven't. We have been searching for inflation for almost 12, 13 years before it finally came back a little bit, but then it seems to be disappearing again. So
why is that? If the raw input for everything is energy, and energy prices have shot up, I'm not even talking about the traded value, but the actual physical value of the commodity. Why has inflation not come back in a more meaningful way?
I have a theory, a sort of half-joking theory, which is, look at the stock market in the US and look at the housing market in China up until 2021. Yes, we don't have increase in inflation or the CPI for many countries, but then most of the money went into asset prices and property prices. So in a way that is good because that is absorbing the upend, the pent-up demand for the consumer prices to go up. But then I think the longer eventual social problem from that is you have increasing income or wealth inequality in the society, and then eventually that's leading to some extreme political movements, which I think we're experiencing right now.
Is de-dollarization real? I know China changed after the tariffs on Russia. I think the pace of change increased. What's happening now after the conflict and the geopolitical turmoil of the past couple of quarters?
I think China has been pushing the RMB to be more internationally adopted through either trade or through exchange swaps. I think that the case with Russia is just one small part of the general push for RMB internationalization. And to a greater extent, I think China has been increasing its trade surplus by so much that it has accumulated a lot of overseas adoption of RMB. That is one part of why RMB is becoming more popular. But just as we discussed in the other session yesterday, I think in terms of the total settlement for the whole world, RMB has not gone up a lot in the past decade or so. So in the regard of, is this a really big push, or is there some balance or market mechanism is at play? I think I would tend to think the latter is more powerful yes, China is becoming more powerful and more international, but then it's still in the eyes of the beholder about which one I would like to hold eventually. And I think a big question for that is how to provide a better venue for foreign investors to invest in offshore RMB-related or denominated assets, which I think goes back to Matthew's points about Chinese companies or Chinese government would have to issue more safe assets overseas, which has not happened so far.
Yeah, I think getting back to one thing Ning was saying before is you cannot de-dollarize unless there's an alternative. And RMB is obviously one possible one. I mean, and one also obvious one, and it was very obvious people 20 years ago, but no one talks about it anymore, is the euro, which again, like why has that not become more of an alternative? I think specifically in the Russia case is interesting because it wasn't unilaterally at the U.S., right? That was actually a very coordinated move with the Europeans, with the Japanese. Part of the reason the Russians were so surprised about this is they thought they'd actually protect it because they moved all their reserves mostly out of dollars, in anticipation of this, and were very disappointed when they found out like the Japanese froze their reserves, for example. So. And that's moving to what I think is the big question here. And if there isn't, constructing a market that would be compelling, having a currency where there are the assets for it and the infrastructure, not a lot of people seem to be willing to do that. And that's what hasn't happened yet.
On that topic, I think crypto was considered as a potential contender to that. And of course, it has its own drawbacks. But then I think the introduction of stablecoin in the past couple of years, maybe solidifying US dollar's dominance in a way about RMB is not pushing as hard or as fast into that direction.
Stable coins are just dollars.
It is just dollars, right. But a different way of using dollars.
Gold and some other weird stuff. I mean, who knows?
Yeah, but then I think the technologically more advanced and more efficient and cheaper way of adopting dollar may give dollar an additional edge.
I would put stablecoin as dollar moving away from SWIFT to a better transfer mechanism, but essentially the dollar. As economists, do you think crypto has future?
If you take the cynical view that the appeal of crypto is the ability to operate outside of the law, then I feel like there's always going to be a market for that.
And also, if you take it as an asset, I think there's always a market for that too, just from a pure motivation of diversification and hedging.
When we were talking about de-dollarization, will it come down to something as simplistic as who owns what percentage of global trade, should have the incumbent currency of the world?
I don't think so. And it has not been so historically. I think it has a lot of influencing factors in terms of what is the trade imbalance looking like, what is sort of the power of the country in order to guarantee or ensure the safety of its security, and then of course the future, how well the economic growth will be in that country, and then of course how bad the inflation will be to offset that growth.
Can you wager a guess as to what will happen again in the next 10 years? To global currency? What happens to the dollar? Also, will it depreciate or appreciate?
Against what?
Against the renminbi, it probably should, because you're running a trade surplus.
Probably so, yeah.
Against a country where they have a deficit against, maybe it should appreciate.
Well, should and would are two different things.
Do you think it will? Do you think it'll become so transient and transactional, the value of the dollar? A lot of people, whenever there's turmoil in the world, when there's a war, even if America is second degree part of the war, people actually move back into the dollar because it's the safe haven asset, which kind of is very counterintuitive when I think about it. Do you think that will change and tomorrow the world will be different?
I think the only constant in life is change. So I think it will change. It's just a matter of whether it's going to change in a decade or change in a century. So I think eventually it will change. And I think there are more and more people saying it cannot go on forever. I mean, meaning that the US cannot always print its way out of any kind of trouble. But then I think it takes time. I just want to make the analogy that the US economy surpassed that of UK in around 1875. But then US dollar did not totally replace sterling until like almost 100 years later. So it's a very long and gradual process and full of changes, ups and downs.
Let me put it this way. As a trader, if I were not to trade a dollar swap, I'm not trading dollar, euro, dollar, renminbi, but I'm figuring out if I should buy the dollar index or short it, what would I do?
One thing for sure, we're not a trader for the next 10 years. So,
yeah, I mean, it's a tricky question because I think one thing we've seen is that a lot of things that appear to be unsustainable, and you can create all these arguments for it, turn out to be sustainable for longer than you'd think. And there are also all these other factors that people don't tend to look at. I mean, one thing I remember learning about, and people thought it was such a revelatory when it happened, there's a big earthquake in Japan in 1995. And people were looking at this, and they were looking at it in the context of Japan had, they'd had their big banking and real estate bust, and the aging and shrinking population was coming out. And so people were saying, oh, clearly the yen is going to depreciate. It was like, there's all these structural headwinds for it to, or tailwinds for it to depreciate, and then you have this earthquake. And what did it do? It went up a ton, because it turned out that all these Japanese insurers had all these foreign assets, and they had all these claims they had to pay. And the foreign assets were in other currencies, and the claims were in yen. So they had to sell all the stuff, and they dumped it, and then the yen shot up. So I think, some of what we call like a flight to safety. I mean, this is all what happened in the financial crisis with the dollar, right? The dollar had been depreciating for a long time. There are good reasons for that. The U.S. was arguably the center of the banking crisis, and yet the dollar shoots up. And it's not because people thought the dollar was a safe place to be. It's because it happened to be the case that there were a lot of short-term claims denominated in dollars, and there were long-term assets that were not. And, that was just how people had to pay their bills. So things like this just make it very tricky to say with confidence, just because we have all these sort of theories like, oh, it should be this because of all these good reasons, and that's how a benign adjustment would occur. It might do something totally different.
I know Ray Dalio, and he keeps saying that when short-term rates go up and long-term rates are below short-term rates, it's the first real sign that the dollar, the incumbency of dollar as global currency is going to change. Do you buy into that?
I mean, far be it for me to disagree, with something that Dalio would say about global macro. I'm not sure I fully understand how that works, but I mean, I think one thing also that's an interesting perspective is, we generally talk about the idea of like a reserve currency, and historically that isn't quite right. There were usually more than one. I mean, some would be bigger than other ones, but even in the period people talk about like sterling as the reserve currency, it was notable insofar as, say, like Japan had most of its foreign reserves in sterling assets, like the early 1900s. But there were other large blocks, and arguably this is a function of empire, but still, like that had French francs or Reichmarks or, US dollars, right? And so it wasn't completely the sort of all one or nothing. And I think a return to that kind of world, I mean, first of all, that world arguably still does exist, right? It's not like 100% of all trade is in dollars, 100% of financial assets is in dollars. That's just not how it is. But there are other currencies used. So you could have more moving in that direction. I mean, even the UK, right? People do not think about the UK as being like a major alternative player, but in terms of its share of global reserves, in terms of its share of financial transactions, the pound actually punches way above its weight in a way comparable that the US dollar punches above its weight. It's just that the UK is such a small economy, people don't pay attention to it, but proportionally it's actually pretty comparable. And I think that kind of thing, could keep happening.
Actually, the euro is comparable. Like if you were to put all of the countries together, I think they get to like 60, 70% of American GDP, right?
That's right. Yeah. But as a share of financial assets is much smaller. So that's what I mean about punching. Yeah, so it could be, right? I think that's striking that it's so much, and that was definitely an ambition a lot of Europeans had at the time, was to be, take advantage and sort of reach parity there, which they have not. And that's sort of an interesting question why, but I mean, that certainly could.
I don't know if I would say this for majority, but there seems to be some kind of philosophical decoupling from the US as well in the recent past in Europe.
The current
like I said, I can't say majority.
The current American administration has not made it easy for the Atlanticist Europeans. I'll say that.
Right.
And then I think it's probably not just the U.S. I think there's Mark Carney, Prime Minister from Canada, made the statement in Davos this year about the mid-sized economy. I think there's probably a greater need for a bloc, maybe that's the majority of the countries, to have a different form of a coalition or collective voice to be heard in the world. Because I think the world is becoming more and more concentrated, US, China, and then everybody else. But the world was not like that.
That was such a good speech. I think he called it middle powers.
Mm-hmm. Yes.
Yeah.
Which is interesting because we talk, Europeans are like, oh, that sounds like us, because each European country thought of that. Yeah. But if they'd actually, put their heads together, Europe collectively is just as big a pull, or could be, as the US and China economically. And yet, that's not how enough of them think about it.
I think that's the opportunity, but that's also the challenge.
Right.
When you spoke about the real estate, the housing crash, Ning, back home, whenever I talk to real estate developers, there's a certain delusion that land prices can never go down. I've heard this time and time again. I've heard this from everybody for a long, long time now. How did it happen in China? So maybe people back home can learn.
I think it's a matter of narrative. I work a lot with Bob Shiller, so I think I'm unavoidably influenced by him. I think in the first decade of this century, it's probably the normal marketization of real estate, because after all, people don't have a property to own before 2000s in general. And then I think after 2008, after the 4 trillion stimulus packages, I think the housing prices went up so much that people were just convinced that this is the best way to make my money. And then I think after 2015, 2016, in order to alleviate the fall down from the stock market crash, I think there's another big wave of the push. So in China, this is why I wrote my book, A Guaranteed Bubble. I think the government has a lot to do to support or to push up or shore up the housing prices, which is solidify people's expectation about housing prices will never come down or land prices will never come down.
Can you elaborate? What does the government have to do?
Well, I think a couple of things. One is, in general, people believe that the central government really cares about the GDP growth. And back in the past decade, from 2009 through 2020, real estate investment is the best way to boost the short-term economic growth. So I think whenever there is a slowdown in the economy, coming down from the central government down to the local government, they all want to sell more houses, build more houses. So that's going to push up the economic growth. At the same time, which I think will be a more complex issue in India, is land sales have become the biggest contribution to fiscal revenues to many local governments in China. So, of course, local governments have the incentive of pushing up the housing prices eventually in order to sell more lands at higher prices. So those two forces work together to ensure people really believe there's no way the government is willing to let down the housing prices. And I think that a guarantee from the government is reinforcing people's already strong expectation, as you described in India, about housing prices will never fall. Of course, that's the purpose of my book. Once it starts turning, it turns very badly.
Yeah, whenever everybody believes the same thing.
Exactly.
I mean, I also say there are plenty of other places that had housing bubbles and busts recently with different economic systems. So it's a pretty broad-based phenomenon. And I think actually the commonality is in those places in Europe and the US and Japan and elsewhere is, because so many people have the majority, if not the vast majority of their wealth in housing, there is a very reasonable motivation for governments to not want housing prices to go down. I mean, maybe you don't want it to go up a lot, but you certainly don't want it to go down because, you're screwing over a lot of your constituents. And so the problem is, as you said, if everyone believes it's not going to go down, that creates incentive to borrow more to go up, right? Because your downside risk is capped, so you're going to borrow more to make it go up, and that's where it gets challenging. But I mean, there is a reason for this.
Do you have property taxes, like high property taxes?
That's one thing I've been advising a lot in China. We do have in 2 cities, but to a far less extent than what we normally have in other parts of the world.
I think that's the only way to keep it in check.
I agree.
I feel like even in India, we have really low property taxes. We have a lot of the shadow economy, the money which is not paying tax sitting in real estate, and maybe a good way to bring that back into the formal ecosystem is having higher property tax.
Yes, and as a California resident, we have the delightful situation of a headline property tax that is normal, but then most people don't pay it because the value of your house does not adjust with the market, which it creates.
Some of my colleagues from UC used to have a research about showing and comparing the different states in terms of their property tax and the amount of appreciation in their housing prices. There's a clear negative correlation between the level of property taxes and the speed by which your housing prices appreciate.
I'll say another thing that, as a policy, reminded of U.S. cross-state differences. The extent to which lenders have less protection if they're lending against real estate, that will also be a useful corrective because the more secure they are, or the more secure they think they are. Whereas, I remember looking at reading research on this in the U.S. The housing debt. So Texas, some legacy of the I think the Mexican Constitution or something was inherited. You essentially, if you did a home equity loan on a house in Texas, more or less, you would know collateral. Like if there was foreclosed, you would get nothing. And so one interesting consequence of this was that you did not have, unlike much of the rest of the country, when in the 2000s, there was not really this huge boom in Texas in housing, in mortgage debt and housing prices because you couldn't use it in the same way as collateral for to finance your consumption, unlike a lot of other states. So I think that's that kind of thing, which is definitely not done deliberately on their part, but that's I think those kinds of reforms can also be useful.
Matthew, as someone living in California, is the world turning left again? Are we going back to socialism?
Not in no, actually, California, San Francisco is
If I take San Francisco out of it.
No,
take a few more pockets out of it, yeah.
Well, no, that's kind of funny. Is San Francisco has a reputation in the United States of being one of the most left-wing places, but in the past 4 years, San Francisco has compared to the country as a whole, maybe, but compared to other cities, moved kind of the opposite direction of a lot of places. So I don't think we're a bellwether, but I also don't think that there's sort of a universal move one way or the other.
What do you think works? You guys are like economists. If you were to try and model policy making and governance for a new country, say we're creating a country today, the country is called Matthew plus Ning. What would the economic policies look like? What is most conducive? You have good demographics, 30-year-old population, 1 million people in your country. Big question, broad question.
I think it depends on whether Matthew is chairing the Senate or I'm chairing the Senate.
Would you like to go first, Ning?
Yeah, I think probably a couple of things. I think, we always argue for a very important trade-off between efficiency and fairness. So I think, borrowing from the successful experience of China, I think I would say to start the country, I would put more emphasis on efficiency than fairness, which is not very easy to sell, but I think that's going to lift the country.
Actually, China started with fairness, then efficiency.
Yeah, I think just before and after the reform. Exactly, yeah. The reform and opening up, yeah, exactly. So I think, but I think that there's already some contrast in there. So I think, I would put more emphasis on growth than the allocation of the resources eventually. But then I think that's the first thing I want to say. The second is we have to have some check and balance in ensuring the very basic welfare of the people who are less advantaged. So I think, again, going back to how do you trade off efficiency and fairness? And then I lean more towards efficiency, but then how do we ensure fairness at the very same time?
Maybe you should coin a term, because this is coming back and becoming so cool again that capitalism and socialism will probably have to merge and come up with a new word, especially because of what Matthew's friends in AI are doing in San Francisco. So if somebody has to come up with a word, maybe it's you with all the books.
Okay, good idea.
One thing I would just say to add to your question, I think the size of the country actually is an important variable here. Like if you're a country of 1 million people, you have a whole very different set of constraints and also a different set of opportunities than if you're a country of 500 million. And I think that's also important. I think looking at if you're starting from the situation of saying you're a country of 1 million people, looking at places that are successful like a Singapore or an Ireland or something, I think are actually the relevant examples more than a big country that had a different experience. And conversely, if you were a big country, looking at those are not necessarily useful because there are certain niches that you just can't fill if you're that big.
And for that matter, I think the three of us were in no position to make a comment on a country of 1 million people to start with.
Yeah, but we can have a new country. Do you think, again, this is a really extrapolated question, but the way the world is moving, for a while when I was growing up, I thought everything was getting more globalized. The world was becoming one. Today, we seem to be going in the opposite direction, each country for its own. Where does this path go? And for that path, what economic model works best?
May I ask, how old are you?
I'm his age, 39.
Oh, okay. You're young enough. So I think we already have very different memories of the world. And I think I grew up in a period when I think the world is really coming together. And then it's changing, of course, for my son and for my daughter, who are both in their early 20s. I think I want to emphasize on one thing. I mean, I do a lot of research on behavioral economics and behavioral decision making. I think memory and experience have a lot of influence on people's mind and how they behave. So in a way, I think we have evidence showing that people who are born and grew up in the Great Depression will be less likely to take risks and invest in the rest of their life. So I think it's sort of self-fulfilling in what you experience is becoming what you do or what you decide to do. So in that regard, I think, yes, I think the world is far less globalization than before, but then how that is going to shape the new generation of the people, I don't know. I think once there's a trend in history, I think it tends to last for quite some time until it turns around. So I think we are, unfortunately, in this period of stagnation or even reversal of globalization.
Yeah, I think Ning has made a really good argument for why you have long cycles of history, because if it's based on experience and people live and then that shapes their behavior for the rest of their lives and they die and you have a new generation that's going to last. I think it is instructive that unfortunately, basically, as soon as you had the generation that lived through World War II die, we suddenly see a lot of sort of fascist or quasi-fascist movements coming back in a lot of the places where they were fighting, and I think that's an unfortunate. And I don't know if it's predictable, but I think it's very much related to the kind of phenomenon you're talking about.
I don't know if this is something you guys cover, but any views on India and what we should do better?
Well, I think it's a large and emerging and a very promising country. And I have to say that I think there should be more understanding about India from China's side. I think I'm under the impression that Indians have more understanding of China, whereas there's not as much understanding of India. Hence, there's less collaboration between the two countries, which is a little pitiful.
Yeah, I'll be honest, I don't know as much as I should. I think one thing I do know that I think is striking and useful is, we were talking earlier about countries that are importing more than they're exporting and their stage of development. I think India actually has been doing that, pretty consistently. And I think that's, they have been having, strong, relatively rapid growth over, past several decades. I think basically it was the early 90s, I believe, there were a lot of reforms that were done in India, and that's sort of, led to, obviously, but that's, you're reaching the limits of my knowledge here, so I'm going to stop.
Okay, I think we're kind of out of time. Any last thought? Anything you want to leave the audience with?
Well, I think we're going through a very unusual period of time. I mean, based on our own growth period. So I think probably just one thing, that is to embrace whatever comes.
That sounds scary.
Embracing whatever comes is a positive attitude.
That's what I thought.
Yeah, I do think, to your previous question, I think that there is a concern about sort of the end of the sort of positive trend of, growing international peace and cooperation and globalization. I think that's going to create a lot of changes, which we've already seen some, and I think a lot of them might be unpleasant, but hopefully we can at least reduce the impact or mitigate that. And maybe if we're aware of that it's happening, maybe make it less of a problem and people be less afraid of each other.
I don't think Matthew is more positive than I am.
I didn't think I was more positive than you are.
But thank you guys for doing this. Hope it was fun for you too.
Pleasure.
And hope to catch up with you guys soon. Thank you.